Every breakthrough, growth is not an accident. In fact, the biggest one is a decision. Ladies and gentlemen, good evening everyone. I am your speaker today, Neerav Shah, and welcome everyone to the stock market online training class. First, let me give you an example of decision. Ratan Tata once said, "The greatest pleasure I have had is to trying to do something that everybody says could not be done. I decided that the India could produce its own car." Everybody, my friends overseas in the automobile business, said that this couldn't be done. We have to go through collaboration to get technology. But we undertook to produce this car. It was called the Indica, and we produce it in India, totally of Indian content. When the car came out, I suddenly felt that I didn't have a friend in the world, and that all the warnings that people had given me were probably going to come true. But the car did come out. I did earn a 20% market share, and we showed that we could do something. A decision not only makes you rich, but also drives the entire Indian economy. This is also very consistent with our current philosophy. Next, let's talk about today's topic. Details related to institutional accounts. Because my assistant informed me that or many people don't know much about Jambi trading accounts. They didn't expect that they really understood the Jambi trading account. They felt that it should be much easier than retail trading in the stock market. This is true, but in fact, using a Jambi trading account to trade is equivalent to helping everyone cross class in the market. Things that retail investors cannot touch can often be easily completed at the institutional level. First of all, you need to obtain institutional trading qualifications. Everyone knows this also. From this point of view, it can be seen that the account used by institutional trading are completely different from those used by retail investors. Next, I will explain their differences in detail. With the rapid growth and diversification of the Indian trading scenario, there has been a spurt in the activities that are as diverse as they are productive. This means that to further the market expansion, at times there arise players who are entities having the requisite tools, resources, and know how to contribute towards the purchase of securities and other investment assets. Generally, these entities pool in their resources to frame a design to engage in securities trade. This kind of investment is known as institutional investment and goes behind the conventional purview of investment made by an individual to accelerate individual fund growth. Jambi is an entity that believes in investor education about various modes of institutional investment and the way it circulates fund and resources in the market. In the broader definition of the market, an institutional investment channel is the one that works in a manner different from that of an individual investor. This is because, unlike an individual, an institutional investment channel does not have a specified or limited productive duration or requirement time. The needs of institutional investors are rather complicated and vary from institution to institution and do not follow the procedural of guidelines of an individual case. This is why institutional investment comes with a whole set of identifiable and negotiable investment platforms. Example of institutional investment includes investment done through or carried out in asset allocation, managers investment companies, endowment funds, pension and annuity funds, insurance companies, mutual funds, banks and other financial institutions, etc. So, these institutional investments channels show that there is no specific period that can be labeled as an accumulation period, and therefore there is no period that can be termed as spending period either. Needless to say that institutional investment serves as an important contributor towards the working strength of an economy. This makes institutional investment a very important parameter to decide the overall productivity of the market. Besides, in a fast developing country like India, institutional investment is a very important channel. This is why a reasonable degree of benefits are given to the channel of institutional investment through governmental machinery. Given the overall scope of outreach that exists in India for institutional investment, there is an even greater possibility of an increase in the support volume given to institutional investors. When viewed in the context of institutional investment, financial structure and the overall capital structure play an important role. Definite policy is often laid down for the composition of long-term funds for institutional investment. This policy forms the basis of the capital structure of institutional investment in India and elsewhere. Decisions regarding the type of capital structure that a commercial entity should have are of critical importance because of its potential impact on profitability and solvency. This is why, for institutional investment, the capital structure should be planned in such a way that the market value of the shares if the institution in question is maximum. This also has the potential of increasing the detailed dividend structure of the institution in the long term. Now, I will tell you about the benefits of Jambi Research Institute. Because they pull money. Institutional investors have much more money to invest than all about but the wealthiest individual investors. They use that money to buy large blocks of securities, and their massive size means that institutional investors' trades can have a powerful impact on the market. Open Demat account. Institutional investors are large firms that invest money on behalf of others, and the group includes large organization with professional analysts. Now I will ask you one question. What is an institutional investor? An institutional investor is a large organization that invests money on behalf of others. These investors come in many forms, such as pensions, mutual funds, bank, healthcare funds, insurance companies, and more. For example, one type of institutional investor is a mutual fund, in which a fund manager buys and sells securities on behalf of the individual investors who buy the fund. Institutional investors pull money for individual investors or organizations because they pull money. Institutional investors have much more money to invest than all but the wealthiest individual investors. They use that money to buy large block of securities, and their massive size means that institutional investors' trade can have a powerful impact on the market. Institutional investors tend to have more experience in the market and more knowledge. They may have access to investment research that retail investors do not have, financial resources that allow them to conduct their own research. In addition, they might have access to investment individuals do not, such as institutional index fund with very high minimums. These large institutional funds often have lower fees than those available to individual investors. Because institutional investors tend to be more knowledgeable and experienced, they must comply with different Securities and Exchange Commission regulation than individual investors. Institutional investors have also had the advantage when it comes to fees. Institutional funds for intensives tend to have high minimum investments but also come with lower fees. Fortunately, this gap has also narrowed in recent years after a majority of online brokers eliminated trading fees and some of the best index funds have cut their expense ratio to near zero. Now, I will tell you about the difference between institutional investors and individual investors. Okay. Now I will tell you first the definition. Organizations or entities that manage investment on behalf of others, dealing in large volume of securities, is called as institutional investors. And in individual investors, individuals who trade securities on their own behalf through brokerage firms or other intermediaries, is called as individual investors. Now I will tell you about access to investment opportunities. In institutional investors, access to a broader range of investment opportunities including private placements, initial public offering and other exclusive deals. But in individual investors, they have limited access to exclusive investment opportunities, primarily restricted to public traded securities. Now I will tell you about investment knowledge and resources. In institutional investors possess specialized knowledge, expertise and analytical resources to evaluate investment opportunities. But in individual investors may have limited knowledge and access to fewer analytical resources depending on their experience and education. Now I will tell you about trading volume. In institutional investors trade in large volumes, often engaging in block trades or institutional size transactions. But in individual investors trade in smaller volumes, typically buying and selling round lots of 100 shares or more. Now we will talk about market influence. In institutional investors can significantly influence market dynamics and security prices due to the size of their investment. But in individual investors, individually have minimal influence over market dynamics and security prices. In regulatory framework, institutional investors subject to less restrictive regulations as they are considered more sophisticated and capable of protecting themselves. But in individual investors face more protective regulations due to their comparatively lower level of sophistication and market knowledge. Risk management. In institutional investors utilize advanced risk management techniques and have the capacity to diversify their portfolios more effectively. But in individual investors, may have limited ability to diversify and manage risks, depending on their financial resources and expertise. Now I will tell you the conclusion. The institutional investor's definition encompasses financial organizations that actively trade and manage investments for the benefit of their clients, often wielding significant influence in financial market. And institutional investors plays a critical role in financial markets, bringing expertise and resources to drive market efficiency and growth. While their influence and large-scale investment provides numerous benefits, it's essential to acknowledge the potential drawbacks, such as increased market volatility and concentrated ownership. Striking a balance between their positive contributions and potential risks is crucial for maintaining a healthy and competitive financial market landscape. Institutional account opening related. Institutions have unique trading needs, often involving large volumes of securities. This account type is designed to meet these requirements, providing a tailor-made solution for institutional trading. Perfect for financial giants like banks, mutual funds, or other large institutional investors that navigate the ocean of the stock market. Each account type is designed to meet the unique needs of different investor segments, ensuring flexibility, convenience, and efficiency in trading activities. Now I will tell you about how institutional accounts operate. Point number 1. Higher financial strength. Institutional trading accounts usually have greater financial strength and can conduct larger scale transactions, thereby earning more profits. Point number 2. Professional team support. Institutional trading accounts are usually managed by a professional team, including trader, analysts, and risk managers, who can provide more professional trading support and decision making. Point number 3. Wider market access. Institutional trading accounts usually have wider market access, including more trading of products and exchange, allowing for better diversification of risks and access to more trading opportunities. Point number 4. Lower transaction cost. Because institutional trading accounts typically conduct larger transactions, they can obtain lower transaction cost, including lower fees and better execution prices. Point number 5. Stricter supervision and risk management. Institutional trading accounts are generally subject to stricter supervision and risk management requirements, which can better protect the interest of investors and reduce risks. Everyone understand? Compared with individuals, Jambi trading accounts have many advantages for retail investors. They can trade in both the primary market and the secondary market. But ordinary accounts can only trade in secondary markets. This is the biggest difference. Why can our Jambi trading account operate the daily limit? We also told the story of bank users on Friday night. We can compare the differences between bank VIPs and ordinary users, and I believe everyone will have an idea. Regardless of the venue, VIP treatment seems to exist. Such benefits are often linked to people's money. For example, VIP cards that are recharged in supermarkets need to be recharged to a certain amount before they can be owned. This is also a VIP treatment when checking in at the hotel, and those suites are often more expensive than ordinary suites. For example, ICICI Bank. ICICI's treatment is still very good. Becoming a VIP customer of ICICI cannot only obtain priority and preferential financial services. There is even an exclusive VIP service line for customers to use. For financial value added, ICICI Bank will also provide tailor-made value added services. It can be seen that in order to retain its customers, ICICI Bank provides very generous benefits. However, HDFC Bank is not to be outdone when it comes to VIP treatment. We all know that the main reason why people deposit money in the bank is to maintain and increase value so that money can make money. HDFC Bank has made good use of physiological reasons of customers. Therefore, HDFC Bank is committed to providing its VIP users with satisfactory financial management needs, thereby achieving the preservation and appreciation of wealth. As long as it can meet customers' expectations, HDFC Bank cannot only retain old customers, but most importantly, it can attract countless new customers. The treatment of VIP customers is sometimes also a way to attract bank users. VIPs of different banks also have different names. Similarly, for our Jambi trading account, when we trade, all orders are placed first. If it is an ordinary trading account, during the collective bidding process, all orders are arranged in order. But our Jambi trading account has priority trading rights, just like Bank's VIP. All orders are placed at the front In this way, when we operate the daily limit, orders will be first, which is why we can operate the daily limit. As for why we can operate the daily limit, we have told you the story of the water tank before, and we will tell you again here. For example, just like the water in a fish tank, if the inflowing water and the outflowing water are balanced, does it look stationary? Is the surface of the water still? But is the water actually moving? It's definitely moving, right? So, there is a truth. On the surface, the UC stocks are not moving, but in fact, the chips are constantly alternating. I hope everyone can understand. Now, I will tell you the advantages of institutional accounts. Point number 1. Buy at daily circuit limit. The number of people using institutional trading account is far less than that ordinary channels. So, transactions can be completed in a super short time. Point number 2. The transmission and refresh efficiency of institutional trading account data will be faster than that of ordinary channels. With trading channels, data will be updated much faster and more sensitively than ordinary accounts. Point number 3. The probability of transaction in institutional trading accounts is also higher than that in ordinary channels. Because the number of users of institutional trading accounts generally does not exceed 100 people. So, the transaction will be successful faster. This is why everyone is asked to register. Because institutional trading accounts need to be applied for, and there are not that many. But everyone should know that institutional trading accounts can have so many advantages, including being able to complete transaction in a super short time. This requires money from the exchange to maintain. This is why institutional trading accounts can be applied for. But there are funds required. When we usually trade, we often encounter problems such as small transaction volume, insufficient depth of matching transactions, too few pending order at one price, etc. However, when we use institutional trading accounts, these problems do not exist. The trading depth is large and transactions can be completed in seconds. Silky smoothness, no lag, etc., including data transmission and refresh efficiency, will be faster than ordinary accounts. So, the advantages of institutional trading accounts allow us to have a certain degree of initiative in our investments. Many members from our Jambi Research Institute collaborate with institutions to boost market sentiments and execute our well-strong plan together. Now, I think everyone should understand why we use Jambi trading accounts to operate UC stock in the market. Okay? The reasons are simple. First, VIP status. Second, all orders are prioritized, ensuring immediate execution as long as there are chips available. Third, all UC stocks are negotiated with the main forces by our Jambi Research Institute. Therefore, during the operations, our members can only cooperate with the main players to boost market sentiment and obtain profit from the limiter. And the next is regarding the issues of quotas. I have discussed it with the Jambi top management team multiple times. Currently, there are still many members who have not used their quotas. We are working to resolve this issue because obtaining a Jambi trading account is indeed difficult. Everyone can make an appointment with the main force for registration in advance. So, once the Jambi trading account is confirmed, I will notify my assistant to inform everyone immediately. We plan to deploy a high quality UC stock on Tuesday after repeated research by our institution with an expected return of over 50%. Everyone can contact my assistant to reserve shares in advance. Once confirmed, we will guide everyone through the operation immediately. See the world with a beautiful mind. Learn to forgive others and treat yourself kindly. Hatred can only keep your mindsets in darkness forever, while forgiveness can bring freedom and liberation to our minds. Ignorant people always hold grudges, but everything will eventually pass. Alright? That's all for tonight's sharing. Good night everyone and see you tomorrow evening. Bye bye.